This is Osprey. Hi, everybody. This is Osprey from MyChartCoach.com, and we're going to take a look at the FANG stocks again. So why am I concentrating so much on FANG lately? Well, there are a couple reasons. One big reason is the FANG stocks have been great trading vehicles lately. These very volatile swings up and down have created very nice opportunities to profit if you're on the right side of the trade. So if you follow the charts closely, there have been lots of opportunities to profit both on the upside and to the downside. And so the key is to follow the charts closely. Okay, they will lead to the pot of gold and they will lead away from danger. It's when we stop following the charts that we start to get into trouble, and that's where you get on the wrong side of the trade. Okay, so Facebook, all right, it is now down here at 25 on RSI. This is an extreme oversold level. You're going to be hard pressed to find the last time RSI was at this low of a level for Facebook. So it goes without saying this is unprecedented times for Facebook. This is a very painful pullback for the bulls, but after the pullback, there is going to be a very good bounce play opportunity. So it's going to be all about a matter of timing and trying not to catch the falling knife. As you can see here, our Fasto is back below 20. When Fasto gets below 20 for Facebook, it tends to be a time to buy. Every time that it gets below 20, it bounces back. So now here we are again at 8.3. So it's in that zone where it's set up for a technical bounce here coming soon. As you can see, today's candle closed well below that lower Bollinger Band. The lower Bollinger Band's up at 156. Today's close was all the way down at 152. This is an extreme move to the downside. The 300-day simple moving average is way up at 162. This is currently trading below all the moving averages. Okay, the price to earnings ratio has gone way down on Facebook, making it one of the more attractive plays on a value basis, on a valuation basis. Now of course, the short-term drama is weighing on the stock price, and Zuckerberg is not helping. Not going to talk to the UK. Who knows what's going to happen when they ask him to talk to the US? It's just they are not handling it well, and it's reflected in the share price. But that's going to create an opportunity for people to capitalize on the situation. Okay, so just keep in mind, one person's trash is another person's treasure, but entry point is everything. Remember the acronym EPIE, EPIE. Entry point is everything, and so it's just all about nailing that right entry point. So Facebook came down here and it did fill the gap from July, and so now it's back below that gap. Okay, so currently the big level to hold is this 150 support zone. You can see here this was the low from yesterday that it bounced off of. This is the big level. If it breaks below this 150 to 148 support zone, you could see it drop down here and test this 145 level. Okay, that was the low from back in May. Okay, so this could be on track to test the low May or the May low. And one way to find when a stock is breaking out to the upside, what we like to do is we look at the weekly chart to find the next resistance levels. Well, we do the inverse for that when a stock is breaking down, when it's breaking below all the moving averages. A good place to find the next support level is on the weekly chart. So let's take a look at the Facebook weekly chart here. You can see RSI is at 31. So this is a very low level for RSI. This is a multi-year chart. So this is the lowest level on RSI in years for Facebook. Now take a look at Fasto. It's way down here at 6.9. You're going to be hard pressed to find Fasto this low on the weekly chart. This is like an all-time moment for Facebook. So it's hitting these crazy low levels on Fasto. And then what you have is you have a break below the 50-week moving average last week. I posted the chart showing that. And then now it's breaking down further. What looks like a good target for a technical bounce play is the 100-week moving average at 147. Okay, I would look for people to load off of that level when tested. Okay, so there's a good chance that that level could be tested tomorrow. I'm going to be keeping an eye out for buyers. This is heading into the end of the quarter, so a lot of what's going on in my mind is repositioning. Since we have the end of the quarter, I think there's a lot of risk getting taken off off the books, and people are locking in gains after the big run the technology sector has had, especially the FANG stocks. So I think what we have is a lot of repositioning going on right now, and the quarter ends on Thursday. So this is March is always a volatile month. This is a shortened week because there's a holiday on Friday, and then we have the end of the month on Thursday as well. So this is a crazy week, and that's why we're seeing a lot of this volatility. There's major repositioning going on, and so I'm thinking next week that might be the chance for the bounce plays to start happening if they don't start happening this week. Okay, so keep an eye on this 147 level. If Facebook holds this level and it's holding next week, that could be the entry point for a reload. Okay, and now let's look at the Facebook 15-minute chart. You can see here every time it gets above this 50 simple moving average, it stalls out at the 100 up here, the gold line. It gets above the green line, stalls out at the 100 and pulls back. Okay, that's the exact same thing that happened over here on the run on the 21st. It got above the 50, hit the 100 and pulled back. Okay, so it repeated the same cycle. All the FANG stocks repeated the same cycle from a couple of days ago. Okay, so now Facebook is down here retesting the March 26 low. Here's that 150 support zone. This is a key level. If it drops below 150, look at 147. Okay, so between 147 and 150, there should be buyers. They should be for a technical bounce play. I mean, we trade a lot of small cap penny stocks that are a total piece of junk, that have horrible business, that don't make any money, and they bounce on oversold technical conditions. All right, to have a stock like Facebook have this type of chart pattern, I mean, this is a really, really good technical bounce play setup. Look at all the volume on the bottom. Not, the key is going to be the timing. You have to have the correct timing. And so what you want to see first is a break above EMA 4. Notice how once it broke down, the candles were riding that pink line lower. Once they get above the pink line, like they did here on the 26th when they bounced, that'll be a signal that it's ready to get moving. So keep an eye on that 152 level, and then if it gets above 153, that's when you could really get the bounce going. And then what it has to do is get back above that middle Bollinger Band and the 50 simple moving average at 156. Once above 156, then it could get moving, and then you're not going to see the legit bounce, the real bounce, the one that's going to really like get moving until this 100 simple moving average on the 15-minute chart breaks. Every time it gets hit, it's been the top. So the key now is you sell at that level. You sell if it fails to break. Fails to break, you lock in gains. If it breaks above, you keep riding for a run up to the 200 simple moving average. This is exactly what we needed. We needed everybody to get super bearish, everybody to think the market's headed into a major downtrend, and for the bullishness to ease. And that's what's happened this weekend. Now we have the call to put ratio has flipped, and now we're seeing an increase in put buying this last 2 weeks over call buying, and especially in the technology sector, put buying has been off the hook. There's been a huge spike, and many times when that happens, that's when the bounce comes. Remember, the market is there to fool you. When everybody's on one side of the trade, they like to do the opposite. Okay, so we are playing both sides here, but looking at a potential bounce next week. Okay, so AMZN, let's look at Amazon. So Amazon's back below 50 on RSI. Notice that Fasto is below 20. When Amazon gets below 20 on Fasto, it's a buying opportunity. Okay, it tends to bounce below 20. Now if you look here on the chart, it is back at the closing price from Friday. Notice how it closed right at that level. If it drops below, I think a good load level for Amazon is going to be right here at that 50 simple moving average. Notice how that was the resistance level before it broke out higher. And what we want to see now is that this level turn into support, this red line, and a bounce off of 1463. So I'm calling for a technical bounce for Amazon off of the 50-day simple moving average 1463 zone. Okay, that level held back here in February when it was tested. Now, if it dropped, this is a target. Okay, so you have a target, and that's what we'd like to see. If it holds, then that would be a signal to load. Now, if it drops below that 50-day simple moving average and it turns into resistance, that would be a major red flag. That would signal the start of a downtrend. That would signal that the 100-day simple moving average way down here at 1316 would be on deck. So this is all predicated on these support levels holding. If they break, then the potential trade is off the table. Right now, we're looking at bounce levels that you can see a technical bounce off, and then if they fail to hold, that's going to be a signal that it's broken. The bottom line is, if these FANG stocks do not reverse and they do not bounce and turn bullish again, that's going to be a major red flag for the entire stock market. The entire stock market's going to go bearish. Our stock market is based on FANG stocks right now going higher. There are no other sector leaders. Who's going to take the lead if the FANG stocks go into bearish downtrends? If Amazon gets into a long downtrend, if Netflix gets into a long downtrend, it's going to be major pressure on the markets. So we have to see buyers step in at the 50-day simple moving average and at 1464 level for Amazon. Now, if you look at the 15-minute chart, you can see this crazy pullback they had today. All right, so today it came up and it stalled out at the double top level. You could see here on the charts, it had the gap up open and then it stalled out up here. When the share price broke below the blue line here on this 12-15 candle, that was your signal to exit. It was not holding support. It failed to get above that new high. Anytime you fail to stay above the high of day, it's a red flag. Okay, if you did not get out on the break below the 300 simple moving average, when that middle Bollinger Band broke, that was your signal to lock them in, especially since earlier in the day, at this time when Amazon was breaking down, we had the other FANG stocks under pressure, and so they all trade in unison. When you start seeing the other FANG stocks under pressure, your FANG stock that you're in is likely to be under pressure as well. They all trade in sync, and so you'll see on this 15-minute chart how they all have the same pattern. Look how this fell off a cliff. I mean, they drove this thing down so hard. Now it bounced at the end of day. Look at the giant volume spike. The key is going to be this close on the 23rd. It has to stay above that level at 1495, and then it needs to break EMA4. Look how it rode EMA4 straight down. So once it gets above 1500, that'll signal it's trying to bounce, and then it'll have to get above 1511. All right, if this 1495 and 15 turn into resistance, I would look for a drop down to 1464 and see if support holds when that level is tested. Okay, let's look at Apple here. So Apple is held up better than the others today because they presented. They had some new iPads that they came out with, and it was sell the news. And so I'll show you on the charts how we played it in our chat. This was a stock that we loaded up on Friday. I know, can you believe it? We were loading last week, and so we were loading back here and loaded up on the dip, and then people were getting in, yeah, anyways, we were loading call options here, and then on Monday it paid off and had the nice move, and then today it started off really strong, and traders in our chat were able to lock in gains near the high of day before the bottom dropped out. And so what happened here is the 150-day simple moving average at 171.78 failed to turn into support, and the share price pulled below. The close back below EMA4 at 169.74 is a major red flag. That signals downside risk. What you could see now is a drop down to 165. You want to see this 165 level hold. If it breaks, the 200-day simple moving average at 162.29 is on deck. Okay, I'm thinking that now that it closed below EMA4, there's a good chance that it's going to hit this 162 level. If that level gets hit, you want to see buyers step in like they did back here in the first week of February. If that breaks, then you could see that 300-day simple moving average at 154 tested. So 165, 162, two big levels below. They need to hold. If they break, you could see those 150s back on deck. If it gets back above EMA4 at 169, that's going to be your signal that it's back in play. Okay, it has to close above EMA4 to get the reversal going. Unfortunately, we have the bullish reversal patterns that were either created or confirmed by these FANG stocks got tore up today with the red candles, and so that's never a good thing to see. It's always a major red flag when you have a really bullish move followed by a very bearish move. The odds are that the bearish pressure is going to continue. Okay, so this is a sign that the bears are still strong. If you look at the 15-minute chart here, the share price ran up and then closed up above the high close yesterday, and that signaled more upside. And then there was a gap up open today, and basically when it pulled back, it was holding this 200 simple moving average, and when it bounced back back up and retested. This is the spike after the event happened, and they released the new iPads. And then when the red candle formed, alerts were put out that the high of day was failing to break, and that this was likely to be a temporary top. And so yeah, we were locking in gains up here in the 174s, and that turned out to be a good call. You know, right afterwards, the bottom dropped out. I did put out more alerts when the 200 and simple moving average and middle Bollinger Band, which is the 20 simple moving average, support levels were breaking on this red candle, and that was another signal to everyone to lock in gains. And then, as you can see, the bottom dropped out afterwards. So the bottom line is, it pays to be in the chat. We're not only teaching, but trying to show you in real time how the technical analysis works. And so now it dropped all the way down here to this 167 support level. Okay, so this is the big support level from the 26th and the 23rd, and basically it's got to hold this 167. If it breaks, you have 165 on deck, and then if 165 breaks, you're looking at 162. I think there's a good chance that 162 gets tested on this run. You really need to see that 200-day simple moving average hold on the daily chart. It really needs to hold. Okay, let's look at Netflix here. Netflix had a nice move yesterday back above that middle Bollinger Band, and then boom, today it was just a nasty candle. As you can see, you've got Fasto back down here at 9.98. This is extreme oversold. You've got RSI now below 50. That's a major red flag. The chart is cooling down. Yeah, the drop back below the middle Bollinger Band is not what the bulls wanted to see. It needs to hold this 300 level. It's closed right at that same level from Friday, just slightly below, signaling possibly more downside risk. And so for Netflix, I think if it comes down here and it hits that 50-day simple moving average at 282, I think you're going to see a lot of buyers step in for a technical bounce play. Notice how that was the top from the 29th of January. When there was a close above this top from January, that was a signal that it wanted to break out higher. So what we want to see now is the share price pull back to this 282 to 285 level, and that level turn into support and have a technical bounce. Okay, that's very similar to back here on Amazon. So Amazon and Netflix are the two strongest of the FANG stocks, and we want to see both of them bounce off that 50-day simple moving average. The 50-day simple moving average is the target if support holds. If support breaks, then you want to stay short. Okay, so let's look at the Netflix 15-minute chart. You can see here the same scenario. When you get a high of day, okay, so here's today's high, and then there was another high above, right? And then when it pulled back, and then it failed to get back even up to those levels, let alone make a new high. This candle right here, that was your signal that it's breaking down. Okay, and then if you didn't, it did. So it's not a really easy way to see if the chart is losing strength. It is by whether or not it's making new highs on the 15-minute chart, and if it's failing to do so, that's your signal that it's cooling down, and that's one way to be able to lock in those high of day gains. Now, if you wait on, but if you're not able to nail that high of day, it takes some skill and some practice. But if you want to wait for another signal, this candle right here was your big red flag. It broke below the middle Bollinger Band, the dotted purple line, and below the blue line, the 300 simple moving average. This was your big signal to get out, and then notice it came all the way down to the 200, and that turned into resistance. So this candle right here was your big signal to get out. Now, the problem with exiting on this candle is you're fighting everybody to leave at the same time. That's why it dropped between 317 all the way down to 312, because everybody finally decided at the same time to get out. You're better off getting out up here, right? Getting out when the chart starts to break down before everybody sells. It's way easier to sell into strength than it is into weakness. Okay, this action down here is when everybody's fighting each other to get out. Now we have to have Netflix needs to bounce off of this 23rd level. Okay, so if it turns into resistance 301, fails to get back above 301 and above EMA4 at 301.57, that's going to signal a red flag, and that's where you could see that drop down to 282. Now, if it gets back above 301, that's going to signal that the bounce play is starting. Okay, so look at this candle right here. Okay, so it was trading down, it got above the pink line, and that signaled the start of the run. That's exactly what we're looking for here. We're just looking for a break above, and then we'll start riding again. Okay, so you ride calls up, and then you jump on the puts and you ride the puts down, and then you ride those calls up, and then you just keep repeating the cycle. I mean, if it ain't broke, don't fix it. If you're making money, keep ringing that register, right? And so let's look at Google here, GOOGL. Okay, so once again, okay, we have RSI at 33, so it's hitting that 30 oversold zone. Look at Fasto down here at 5.6. Now back here when it was August, August was the anomaly that I talked about in previous videos, how it stayed pegged below, the FANG stock stayed below 20 on Fasto, and that's what we could be experiencing here. That's what it feels like. It feels like that August type of move. Now for Google, it broke below that 200-day simple moving average today. That was a major red flag. When that 1024 broke on the daily chart today, that was your signal. Okay, this is heading lower. All right, so there's a good chance that this is going to drop further. It did close at that closing price, the low close from February. Now this would be a major red flag if it closes lower. It closed exactly at that low close back in February. Okay, now what it looks like to me is I'm thinking 300-day simple moving average at 977. Right? That looks like the target. If you see Google hit that 300-day simple moving average at 977, I think a lot of buyers are going to step up. I mean, people were catching falling knives up here, and there were a lot of falling knife catchers here. I mean, I think smart money is going to be looking to load off that 300-day simple moving average. So now that the 200 broke, keep an eye on 977. Okay, now look at the Google 15-minute chart. Notice how it did break below that closing price on the 26th, that low close. That is a red flag. When it breaks below, that signals more downside risk. Exact same setup, okay? We follow the patterns. See, the patterns are what makes the money. It doesn't matter what the ticker symbol is. It's all about the patterns. If you learn the patterns, you can just keep repeating success. And so right now, with the candles falling below EMA4 here, once they get above 109, that'll signal the bounce is starting, similar to right here. Notice how they were below EMA4? They got above, turned into support, and then the run started. Now they're down below. And so it needs to get above, and then get above that 1015 level. If those levels turn into resistance, look at 977. There's we can have a game plan on how we think everything's going to play out, but the bottom line is we are just small players. We're only along for the ride. We follow the big players. We follow the volume. We're just trying to stay on the right side of the trade. We're trying to stay one step ahead of the herd, and we're trying to keep making profits for everybody in our chat. And so if you'd like to learn how to trade and make money, no matter whether or not the market's going up or down, come join our chat. I'll post the link below the YouTube video. Thank you.